Before the coronavirus outbreak triggered a market-wide meltdown, the Dow dropping 12% this week alone. The big story was the rise of ESG investing, and that's environmental, social, and corporate governance. You know we believe in it on this show passionately. After decades of ignoring this stuff, Wall Street suddenly seems to care about sustainability. I don't think that's going to change anytime soon. And that's why we're on the hunt for companies that can benefit from this new theme. Companies like Hannon Armstrong, Sustainable Infrastructure Capital. It's HASI for you home gamers. This is a real estate investment trust that invests in energy efficiency, renewables, and other sustainable infrastructure projects. The idea is pretty simple. If you believe climate change will be a global catastrophe, like I do, then anything that fights climate change will probably be a good long-term investment. And hey, it's increasingly looking like that. Over the past 5 years, Hannon Armstrong has given you an average annual return of 25%, trouncing the 12% average return from the S&P 500 over that exact same period, and absolutely crushing the energy stocks. So does this stock make sense in a tumultuous market? Let's take a closer look with Jeff Eckel. He's the chairman, president, and CEO of Hannon Armstrong Sustainable Infrastructure Capital. Get a better read on Wall Street's newfound embrace of sustainability and what it means for business. Mr. Eckel, welcome back to Mad Money. Good to see you, sir.
Good to see you.
Okay, so Jeff, we had Etsy on yesterday, and Etsy said, you know what, we've been doing some stuff for the environment. It turns out to be good business. The narrative, though, is that when you try to do sustainable investing, it generally goes like this. It's noble, but at the end of the day, the returns aren't that good. That's wrong, isn't it?
That's certainly inconsistent with our investment thesis. We think in a world increasingly defined by climate change, we're going to make better risk-adjusted returns investing on the climate change line. And there's some detail into our investment thesis. 7 years into it as a public company, we're doing a very, very good job of proving that.
Now, a dynamic pipeline, behind the meter, grid-connected, sustainable infrastructure. Can you just give us some samples of all those?
Sure. Well, first, let's say we're the first public company to invest solely in climate change solutions. And for us, that means it reduces carbon or it makes communities more resilient.
Right.
So in that context, things that reduce carbon, energy efficiency, wind, solar. Things that make communities more resilient, stormwater remediation. Evacuating water when you have 100-year storms every few years.
Okay, you're the man I need to ask this to. I think there's something going on in the financial world that the carbon stocks are doing so poorly. And I think it's exactly what you said. When you talked about if you can reduce carbon, if you increase carbon, younger money managers, they're not going to buy your stock, are they?
I'll speak for our investors. It is a group that is very focused on making money, not getting a subsidized return, not doing anything but making money.
Okay.
And we get asked those good, hard questions all the time.
Well, I mean, I think it's fair to say that Exxon had a 7% yield today. Exxon was once the premier company in this country. It was one of the top 5 companies, largest companies, even recently as 10 years ago. But that is counter to what you do, and yet you still give a good yield.
Absolutely.
Well, when I look at this, I'm trying to figure out why, who are still doing these projects in an era where President Trump doesn't care about these things and likes coal.
You know, financial markets are quite different than politics, and we're a 40-year-old company. We've seen a lot of things come and go in terms of the politics and policies of climate change. We have 20-year, 25, 30-year assets. These are going to be multiple administrations. We invest in a way that doesn't require supportive federal policy. If we want to fix climate change, that would be terrific to have some supportive policies like a carbon dividend. But otherwise, our business is economic. It's making people money. When we make an investment, it saves the user of energy money.
All right, so is that how you did? I mean, you're average 25% versus 12%. That must mean to me that you have a consistent pipeline, that every year there's more and more business, or else we would be concerned that that is a return that's one-off.
So if you think of if you look at investing in the energy sector, the transport sector, and the agriculture sector, and you look at it through a lens of climate change, this is the largest investment opportunity imaginable. These are 3 outstandingly old traditional industries that are getting changed and disrupted because of climate change. So this is a terrific market to invest in. We love that Microsoft wants to put $1 billion and Bezos wants to put in $10 billion. Not for nothing, we did $1.3 billion last year and
right.
$2.5 billion in the last 2. drops in the bucket for the amount of capital required.
Well, all right, let me play devil's advocate. Popular president, one, completely disagrees with you. Thinks there is no such thing as climate change. Younger people reading text, maybe there's no such thing as climate change. How do you deal with that?
Our investment thesis is based in statistics, physics, and economics. You don't have to believe in climate change to believe our investment thesis. It's that simple.
Right. And therefore, what an outfit like BlackRock, $7 trillion, when they say, listen, we should care about climate change, that's good for you.
Oh, it's absolutely brought a tremendous amount of focus and discussion in the equity sectors to what we consider the essential issue of our time, climate change. Talking about a fundamental reshaping of finance, though, I think there's three things that have to happen. The first is that Wall Street banks and asset managers have to ask a simple question. Is this investment accelerating climate change or slowing it?
Yes.
The second thing is they need to publicly disclose every one of their investments. Just not the investment, but the carbon impact.
I like this.
And the third, we use a metric called carbon count, because if carbon counts and capital is scarce, we should be making the most impactful investments. And the way to do that is to measure our carbon count for every investment.
Okay, what I'm going to do is work with your company on this. I mean,
Great.
Our show's changed. What you said is really important. Climate change is the ultimate thing that we face, and we have to win.
And it's a great way to make money.
Fair enough. That's Jeff Eckel, Chairman, President, CEO of Hannon Armstrong, HASI, on because we recognize that this is an issue that the clock is ticking on.